Good morning, everybody. Paul here coming at you with a Crypto Coffee update in which we will discuss all of the news, happenings, events, and even more as it pertains to the world of digital finance and digital assets. And of course, being that it is indeed a Crypto Coffee update, I implore you to join me for a delicious simultaneous sip. So, cheers. It's kind of a weak sip, but nonetheless, coffee, caffeine, good stuff. All right, so we're here at Cryptide.cc, our lovely website, where you too can get information like the videos, the news that we post, and of course, under the blog section, there is next week's crypto, which includes all of the conferences that we aggregate so you can stay up to date on what's happening in your local area, and that could be fun. I mean, getting to meet people who are interested in the same stuff, fantastic networking opportunities, it's great. All right, so let's go ahead and get into the meat of the matter, the news of the day, which is 95% of reported crypto volume is apparently fake. That's a lot more than even I thought. I thought maybe 80, 85%. Nope, we're talking the vast majority, the lion's share, 95%. And this is talking about CoinMarketCap, who seemingly just throws data up as they receive it. Bitwise Asset Management has done a fantastic job ascertaining what this means. Turns out it's actually very healthy for a potential Bitcoin ETF, and identifying the players in the space that ultimately are carrying out these wash trades, which is exactly what's occurring with this 95% fake volume. It's to pump up the numbers of a new startup exchange to hopefully attract real users over time, and perhaps in less, I guess you could say, upstanding cases, hopefully to attract users to eventually exit scam. And that's never good. And this is really just an introductory article, and we extrapolate to the daily, where you can see just yesterday in a 24-hour trading volume versus reported volume report that only 1.7% of the volume that was reported was actually real volume of a buyer and a seller meeting and exchanging a digital asset at an agreed upon price. The rest is just bebopping back and forth to make it look like something's happening. The differences here are startling. $8.75 billion worth of reported volume doesn't exist, whereas only $151 million of reported volume was a real buyer and seller interaction getting together and exchanging a digital asset. Definitely not necessarily the best thing you would assume on the surface, but as said, the actual volume is far more orderly than one would perhaps suspect, demonstrating that the robustness and maturity of the Bitcoin ecosystem is perhaps greater than one would previously assume. You can see here an exchange breakdown of all of the various exchanges by total reported volume. Ultimately, as we saw, this isn't the real case. So let's go ahead and take a look at the Bitwise report, which this is. It is a 200-something page report, 227. That they submitted to the SEC, hopefully allowing the SEC to better understand how actual crypto markets function, and hopefully they'll better understand that this is a much more orderly and potentially regulatable market than previously assumed. Now, that's not necessarily a great thing in terms of government intrusion, but overall, in terms of an ETF and the maturity of the crypto markets, it's definitely a positive sign, perhaps, although a tenuous one. Coinbase Pro is one of the most voluminous, I guess you could say, or volume-ridden exchanges with real volume of $27 million in daily Bitcoin volume. You can see here that the spreads are pretty low, and generally that's what you want to see in a real exchange. You can see there's more round numbers sold than not, so more 1 Bitcoins than 0.017, which is a very robotic non-round number. Of course, individual human beings are more likely to trade round numbers than statistically significant numbers per se. People like round things that make sense. And you can see here, these gray candles which bounce up and down seemingly sporadically. That's indicative of actual volume, people trading at various times throughout the day. Not only that, you can see the spread. The spread here is 1 cent. So extremely tight spread. And the spread is what is referring to the difference in price between the lowest sell order and highest buy order. So here's a buyer and here's a seller, and eventually they meet, and that's the established price. So it's very, very tight here at Coinbase Pro. Whereas a suspicious exchange, it looks a lot different, which we'll take a look at now. Coinbase is almost completely fake in terms of volume. No real users really on this exchange. $480 million reported in volume, though, so that's kind of weird. Let's take a look at the actual exchanges that's occurring. Let's take a look at that. $3,271.27. Sold, bought, sold, bought. Boom. So back, forth, and that's the end of that. So it looks as though some significant volume is occurring here, but overall, it's what's known as wash trading, where for every buy order, you have a sell order of an equal amount, essentially just sending the amount of crypto back and forth through various owned accounts, either through colluding individuals or perhaps even the same individual, just manipulating the perception of the market. Not only that, you can see here that it happens at very particular intervals, almost immediately as it's sold, it's then bought back for the same price. So really strange stuff there. You can see as well, there's no more orders for round numbers than there are for seemingly random numbers. Maybe they're statistically significant, or maybe they're just placed at seemingly random, but one would expect actual humans to ebb more towards round numbers. It's more human readable. And of course, you have the spread, which the spread is $34.74, which is insane, and indicative that no one's really using this exchange. Ultimately, arbitrage would seek to close this gap to as tight as possible between various exchanges. And of course, if real users are using it, generally buyers and sellers are going to come to an agreement more quickly in a tighter kind of spread. But this does not seem to be the case here on Coinbene. Remember, it's 1 cent on Coinbase Pro, $34 here. So definitely wild stuff. And of course, the social media doesn't add up. Coinbase has way more. Coinbene has only 10K followers versus Coinbase's 1 million. Far less Google results. So why would Coinbase Pro have $27 million and this seemingly like no-name exchange out of probably China coming out with apparently almost, what is this, 200 times the volume or 20 times the volume? It's just not feasible. So as said, there's been suspicion about this kind of stuff for a long time. It's really, really great to see that we're moving into a more empirically geared kind of research culture here in crypto. It's fantastic. Congratulations to the Bitwise team, and thank you for your hard work. This is a fantastic deck. Like I said, we're not going to look at all of it. It's 227 pages, but absolutely go and check it out. It is totally worth your time. It is enlightening to see exactly what we've hypothesized here at Cryptide for a number of years now, that we've become more vocal about over time. But yeah, we see it here now straight with empirical data that this is indeed shady stuff, and it's digestible even for those that work at the SEC. That's just kind of a joke there. I'm sure they're more geared to understand this kind of stuff than perhaps even me, and hopefully they'll put it to good use in terms of guidance for how the space ultimately will treat an ETF. Now, moving on from fake volume, we're talking about a wait a what? Ripple partner Santander says it's using XRP to send money to 19 countries. That's crazy. But turns out, here's the actual tweet. Yep, straight for the horse's mouth. XRP, 18 EU countries, and the USA. That's from Bank Santander. That's crazy. However, this is a great example of not really why, but how quickly fake news can spread. Here you can see immediately under this tweet, oh, we're sorry, unfortunately due to a misunderstanding, we've given incorrect information. We're actually using XCurrent, which means they're not using the XRP token at all. They're simply using the underlying Ripple technology to transfer funds back and forth, assumingly from their own tokenized assets, or perhaps even just using a stable coin like the US dollar or USDC or anything like that to transfer funds back and forth, but not actually using the XRP token for settlement. This is a great example of how quickly this kind of fake news can spread, and ultimately it is great that this article was updated. You can see it right here in bold at the top. So definitely want to give a shout out to the Daily Hodl staff for taking the right course of action and updating this article. But this is what happens ultimately when the rush to news to print as fast as possible is the culture of crypto. Ultimately waiting and seeing, even if it's just for a few hours, and ultimately perhaps digging deeper and doing your own research to find out what's going on is what results in the best type of reporting. Not to pick on the Daily Hodl in specifically, again, as said, they corrected it, so big shout out to them. But again, this is just an example of why you should dig a little deeper when looking at just the headlines, and perhaps add a bit more healthy dose of critical thought when you're looking at these kind of things, because you never know if it may be a misreporting. Just a daily dose of caution from your buddy Paul. Let's get back into some more corroborated news, talking about BMW and Intel. They have partnered with a government-backed accelerator for blockchain in particular. This is something we've talked about previously on this channel, as it is the Singaporean government's Tribe Accelerator. And BMW and Intel are very large corporations, and both kind of operate in different markets and industries. So it's really interesting to see this dual partnership announcement. And to move forward as a society, we need to encourage experimentation, and once the benefits of blockchain technology become evident, mainstream adoption will undoubtedly follow. That is from the Tribe Accelerator managing partner Ryan Chu, and definitely a long time horizon, very low time preference sort of statement, talking about moving society forward as a whole, not just this partnership in particular. So I'm assuming based on that, there's not a lot of empirical evidence as to what the parameters of this partnership will entail, but definitely interesting to see Singapore continuing to grow as a blockchain hub. Remember, previously, when we looked at another Crypto Coffee update at ICO Stats, we saw the Singaporean city-state was surprisingly well ranked relative to other major nations in the world. So it just goes to show Singapore is showing exactly how big of a punch it can pack relative to its weight class as a tiny island nation. So really interesting stuff there. Now, moving on, we got Bloomberg saying that Bitcoin and Ethereum traders are lining up for a new trend in crypto. Now, this new trend is what's known as BlockFi. I've been hearing a lot about BlockFi recently. They offer essentially loans to various entities, and they therefore offer interest to individuals who want to provide collateral. A really enticing 6% annual interest rate that compounds to 6.2%. And even more interestingly, they're saying that they don't necessarily want to be an entity for crypto whales. They rather want to serve retail investors, so they're introducing a cap of 25 Bitcoin and 500 ETH, which is still a good amount. Roughly $100,000 and $70,000 respectively, and you could still earn 6.2% interest on that, so beats any savings account here in the United States at least. And if you have funds greater than those amounts, you can lock it in at a 2% interest rate, which is still pretty healthy. So yeah, BlockFi has really been taking the crypto world by storm recently. I don't have any personal experience with it, not really my cup of tea per se, but it definitely seems to be perhaps a more above board regulated way to put your capital to work while you're not actively trading or doing this, that, or the other, or really just twiddling your thumbs waiting for the price to go up. I know you're out there, guys, and that's totally fine. It's all about your risk tolerance and your risk appetite and what you're willing to expose yourself to in terms of risk for various gains. And this seems to be a pretty interesting way. Curious what you guys think as well. Let me know below in the comments, or let's talk on the Discord. Always great information happening there. Origami Oracle's there doing his analysis, so if you're interested in some of the particulars of how the market ebbs and flows in real time, he's the guy to talk to. I'm more of the research kind of guy, digging into the fundamental analysis, and it's amazing stuff. Make a great team. All right, so Iran is switching it up there, saying, hey, you want to come and visit the country? You can spend your crypto here in the tourism industry. So that's fantastic. As you can see, it particularly applies to tourists, not locals, which is kind of a nuance there that may potentially impact the overall perception of how this may affect adoption. However, with that said, as merchants and other individual entities begin to interact with crypto from tourists, perhaps they will begin to permeate this idea into the wider society. After all, we talked in a previous episode about how Iran is becoming more and more crypto friendly, particularly in the face of harsh sanctions from the Western world. They obviously need to have some kind of competitive force. And ultimately, if the SWIFT system locks them out of the global economy, then a more neutral third-party medium of exchange and platform such as Bitcoin can really serve the interest of what are largely becoming, unfortunately, pariah nations on the world stage. So realistically, it seems we're entering back into a more multipolar world in which various states can interact with one another without having the mainstay of the US dollar controlled by the various Western powers. So really interesting stuff there. Curious if anybody has any more information about Iran in particular. This was a fascinating article. They're talking about, again, for one, a sovereign cryptocurrency backed by the rial. So it's really interesting to see how Iran is kind of blending the traditional and the modern, moving into digital finance. So really cool stuff. Keeping in mind as well, just as an aside, Stellar Lumens was declared a few months back the first Sharia compliant blockchain. So really interesting stuff. Perhaps they will ultimately use the Stellar Lumens network for the rial backed crypto. Something to keep an eye on and think about. All right, now complete other end of the spectrum. Let's go from, yay, we're doing it for tourism, to, no, crypto bad, crypto ban. That's what we're talking about with Mexico's central bank. They're talking about regulations that could ban cryptocurrency exchanges in their entirety. Assumingly this won't affect local bitcoins, since that is a peer-to-peer exchange. However, the bill does not look good, and if passed, it could make Texas's recent proposal to identify individuals who are using crypto look like a walk in the park. So let's take a look at what's going on here. Here is a quote from, where are you at? Another individual. Oh, I had your name. Or did I? Might have been a different article. Either way, here's a quote. An approach of protecting consumers by eliminating regulated exchanges is no different than failing to promulgate automobile safety standards for car manufacturers and instead prohibiting people from buying cars in the first place and allowing only buses on the roads. I think that's a fantastic analogy and exactly what it really hits to the meat of the matter, and the central point here is the idea that due to fear of this technology, or perhaps a misunderstanding, ultimately, a very intense level of prohibition is handed down from the judiciary, which means that individuals cannot in turn begin to expose themselves to a more regulated and safe framework, which ultimately means kind of black market activity for these kind of I don't want to say projects, for this activity in particular, for this sector of the economy. Black market activity begins to spring up around it, and therefore you have a self-fulfilling prophecy in which, of course, now these individuals are violators of the law, therefore it should be banned because these individuals are violators of the law. So it seems a bit draconian, to say the least, and hopefully this is something that ultimately gets struck down by the judiciary, as it is right now just a proposal from the Mexican central bank. But nonetheless, something we will keep an eye on moving forward, and as said, hopefully this gets struck down, because if so, it'll put Texas's draconian laws to shame. Now, an update from Binance talking about their launchpad for token sale. They're essentially switching things up that has some of the community excited and some perturbed. It's more of a lottery ticket allocation now, meaning that the whales in the Binance community, perhaps even Binance themselves, individuals who hold large amounts of BNB tokens, are going to be disproportionately favored relative to other individuals. So individuals who own huge amounts of Binance have a greater potential probability of receiving huge amounts of tokens that are launched on the Binance platform. So while this is kind of like a whales helping whales situation, there is a bit of reasonable justification for this perhaps. After all, if you are a disproportionate holder in a project, you have stake in that project. So seemingly this could be seen as perhaps a bit like an injection of equity or maybe some kind of payout from investing in Binance tokens and holding them, ensuring that a certain amount is locked up because you're not selling them. So really, it makes sense from a capital perspective, but I could also see how it could leave some users perturbed. As said, the numbers break down to very heavily favor whale accounts or individuals with huge amounts of BNB tokens. So let me know what you think of that. Do you guys think this is a bit of a shady allocation, disproportionately favoring people in a way that's negative, or do you think perhaps this disproportionate favoring of large accounts could be positive for the ecosystem as a whole, since these are individuals who are invested? Let me know what you think of that, because I'm kind of on the fence about it myself. Really, it could go either way. Amorally and without any personal emotional investment, I'm kind of on the side of Binance with this one, but again, it could go either way. Now, next up, this is from The Block, which you can see here. Founder tried to sell a failed crypto project on eBay, and yeah, just let that sink in. From the great crypto bubble of 2017 and 2018, it had to bust, and now this guy's selling his entire project on eBay. Weird stuff. The article reads kind of sad, and we'll get to that in a second, but it's a really short article. For $60,000, low price is $60,000, you can buy yourself Sponsy, which is a blockchain project for sale, and it looks like it's for particularly sponsorships and whatnot. So you can use this crypto to what the guy was hoping to do, I guess, use it at major retailers or vote for specific things. Personally, because he's selling it, I didn't look too much into it. Doesn't look like something I want to drop 60K on per se. But yeah, it comes with full decks as well. So if any of you are out there looking to buy a cryptocurrency project, this may be one that may potentially interest you. Now back to the article. You can see here, this is why I try to drive home the idea of security token offerings and ICOs so heavily, and why you got to do your own research before you launch a project, guys, or even start digging into one. Because if you don't, you can end up having a lot of redundant work being done for seemingly no reason, as ultimately the goalpost moves and changes and kind of froths around in the ever-changing currents and seas of the financial and legal landscape in this case. So ultimately, this person said that according to him, it all went wrong because the company hired a lawyer. Now, was it a good lawyer or a bad lawyer? Well, it turns out ultimately this is a case of being told what you don't want to hear and running in headstrong anyway. Essentially, the lawyer said they shouldn't launch an ICO before they had a real product that some users might be using. This is what's called the Howey test. So assumingly the lawyer was using the Howey test and saying, hey, you guys don't have a working network, which means if you do a raise, it'll ultimately classify you as a security. So you probably want to register that beforehand. I asked him why, and because I saw so many ICOs out there that did not have any idea for a product, yet they managed to raise tens of millions of dollars. This is what we call a fraud. And again, even companies that aren't frauds, like Gladius, they hosted an ICO. They weren't frauds. They were trying to do a project, just as Komar is saying here, and they had to give back all the funds because they ultimately ended up being a security because they failed the Howey test because they didn't have a functioning network before their capital raise. And if he could have a do-over, he said he wouldn't listen to the lawyer. Of course he wouldn't. He knows best, after all. He believes from the business point of view, running a token sale as soon as possible, quote, to jump into this crypto craze bandwagon would have been the right choice. Maybe from a very short-sighted capital gains perspective, but perhaps not from a legal perspective. He believes by the time the product was ready, mid-2018, there would be no market for his ICO. And he's right, because this is what happened. Ultimately, people raised tens of millions of dollars for products that didn't work, and the market woke up to the fact that this is absolutely bonkers and stopped funding crazy projects that have no product that backs them up. So really crazy stuff there. I just found it humorous that this individual's sentiment was, oh, it's the lawyer's fault. It's not the fact that I just had an idea and did some marketing without any real product. He admits that this project didn't require any decentralization. In fact, it could run on a centralized platform with no need for tokenization whatsoever, but the startup promoted it like a decentralized sponsorship platform. So this reeks of fraud. I don't know where this guy is based or who this guy is, but he sounds like the kind of person that really was trying to jump in just to make a quick buck, ultimately defrauding investors. And this is why security laws are the way they are. Unfortunately, you have people out there like this that are just trying to fleece others. Really not the kind of culture we want to have here. It's all about individual honor and trust. And enforcing that using a decentralized network is a great way to do it. Just look at Bitcoin. You got to follow the rules of the ledger. However, stuff like this just leaves a bad taste in my mouth personally. Perhaps you got some humor out of it. I definitely did. If any of my my lovely community members out here are looking for a $60,000 blockchain project that may classify as a security, boom, let them know your buddy Paul sent you. So wild stuff, guys. Moving over to more formal, regulated, and almost, I want to say adult, but it's responsible, really. Just basic responsibility. Responsible entities. R3, one of the most responsible and impressive, in my opinion, entities in the space. The co-founder, Jesse Edwards, is leaving the enterprise blockchain firm. Personally, I wish Jesse the best of luck in his future endeavors. He's definitely helped to build this thing, R3 and Corda, to be the best they can be thus far, and assumingly he will be missed by his coworkers, but he's not leaving the space as a whole. He's not blasting off to Mars to enter a 1,000-year meditative state. He's going to be around, and here's a quote from him. It's true that my work here is done and it's time to move on. This has been one of the best experiences of my professional career, and I'm incredibly privileged to have worked alongside such a talented and passionate team in building this business. R3 has broken away as the market leader and standout partner of choice for professionals looking to apply this technology to their industries. I couldn't be prouder. So again, congratulations to Jesse Edwards there. Article just talks about what he's doing and where he may be going. Potentially he may be going to do some other blockchain stuff out there. So we'll await with bated breath to see where Mr. Edwards ends up. So great stuff there. Congratulations again to a new chapter opening up. Now moving on to perhaps a bit more controversial, maybe potentially somber where you fall on this kind of thing, but a sad joke is what this individual Bitcoin Cash developer, Amari Sechet, is calling the Bitcoin Unlimited implementation. And this is no small implementation. Heading over to Cash Coin Dance, excuse me, I want to get that right, Cash Coin Dance, you can see information about Bitcoin Cash node summary, and you see that Bitcoin Unlimited is the second most implemented, with number 3 dropping precipitously down to only 8 implementations. So this is a pretty big break from the two largest styles of Bitcoin Cash nodes, which is Bitcoin ABC and Bitcoin Unlimited. And ultimately the issue seems to be according to Amari, we'll just go ahead and use his own words, quote, "The BUIP process has turned into a sad joke, with proposals more and more absurd being voted on. BU leaders are complacent, and while saying that the attitude of the Bitcoin Satoshi's Vision community will cost them developers support, they continue to enable the toxic behavior by supporting BSV." And BSV, for those of you who may not be aware, is Craig Wright's implementation of Bitcoin. He is a narcissistic fraudster who claims to be Satoshi with no empirical evidence, has been caught on numerous occasions forging said evidence, and has unfortunately amassed himself a cult of personality following that are seemingly tone deaf to any kind of information that runs not concurrent, what's the word? Runs against the fact that Craig is not Satoshi. So kind of plugging their ears and going headlong. Definitely really shady stuff going on there, but suffice to say that unfortunately this has led to a deeper rift in the community, and really admirable goal from Amari here. My goal is to make Bitcoin Cash successful. Life is too short and convenient sound money is a goal too important to be distracted from. So even if you disagree with Bitcoin Cash, I think that's a great sentiment, the idea that sound money is something that's needed the world over, whether it be Bitcoin Cash, Bitcoin SV, probably not, or some other altcoin. Definitely having a peer-to-peer form of electronic cash, maybe even smart cash, to Bitcoin's store of value, seemingly the form it's begun to take, kind of store of value proposition, is very beneficial. After all, fast, seamless payments, it's where it's at. It's great stuff. So with that said, I think we've covered all of the information we wanted to digest today, folks. Let me know what you think about this kind of content. This was a bit of a longer episode, kind of took my time, delved into some of the implications, and I think we got some great ones here today. Couldn't have done it without you. Always a pleasure, my friends. Thanks so much for listening and watching, and be good to each other. Be kind to one another and spread information, spread love where you can. Much love, everyone. My name is Paul. We are Cryptide, and remember, the tide is rising, as is the amount of news. Exciting stuff happening. Bull market soon, huh? Ask Origami Oracle. He's the guy.